Now, I wonder how you see this PayPal quarter and particularly the cost side. PayPal has been in the penalty box for a while, and now it's getting a nice little pop.
Yeah, I would say better than feared results. That's number one. Number two, the biggest concern has been the fact that e-commerce growth post-pandemic has been normalizing to pre-pandemic levels. So there's been concern that they're going to take numbers down again. They've reset expectations multiple times, and it seems that based on the commentary from Dan Schulman during the call last night, it seems that growth has reached or the normalization of growth reached trough levels, and it seems that we've had a couple of months with accelerating growth. So from our perspective, that's been the biggest issue for the stock. You know, you went from a growth stock to a lackluster growth stock, and it seems that we've kind of stabilized. The cost perspective side of the business, I think a lot of this really depends, and I'm assuming that's what you're asking about, and what Elliot's role here. You really have to maintain a very delicate balance between cost cutting and the need to invest just to remain competitive and relevant and continue to be on the innovation side of the business, especially as they're trying to monetize both sides of their platforms.
Well, there's this combination of cutting and investing that's happening across a large number of companies, not just fintech. I mean, in a way, it reminds me of what we see out of retailers, right, and this inventory correction, except it's an inventory of people. And so is it a question of cutting back on overall headcount growth and then using that to invest in the right strategic areas for these companies?
It is, absolutely. And in fact, they spoke about this yesterday, how they have a lot of tech people, but they haven't really been looking at the more strategic side of the business. And that's really what they've been doing. So I think, again, it's all about maintaining that balance. PayPal has an incredible set of assets, right? 36 million merchants on one side of the platform. It's a very sticky platform just because people love using the PayPal button, which facilitates conversion, very high conversion rates. And then on the other hand, they have north of 150 million consumers, and they're using that mostly for e-commerce, where they kind of dominate that market. All you need to do is pretty much introduce products and services on each ecosystem and sell these into those ecosystems to kind of accelerate monetization. So at this point, it's more about the execution part of the business. The new CFO should focus also on expense control, and that's a big deal too. So all these, I mean, there are a lot of things, moving parts on their plate right now, and it's all about execution to take us to the next level, if you will.
That's interesting. You know, Moshe, I'm thinking back to last summer where valuations were much higher in the space, and you heard a lot more from legacy financials about the threat, the existential threat from fintech. It's going to affect our business. We're going to have to spend a lot just to keep up. And I wonder, as valuations have been compressed, does it make it seem in retrospect that the threat to legacy was overstated?
Well, I think the valuation have been compressed because you went from 25+% growth during the pandemic, just because in PayPal's case, e-commerce adoption really accelerated, to half of that right now. So that's number one. Number two, the threat hasn't really disappeared. Block, formerly known as Square, PayPal, they're both building the super app. These are digital banking products that should be competing with your legacy banking products. So the threat is here. The valuation compression mostly has to do with the fact that growth went from hyper growth to, minor growth. And at this point, we're going back to pre-pandemic levels and continuing where we were.